Profit or loss statement under IFRS 18. Let's talk about top 4 changes introduced by the new standard. I am Sylvia of cpdbox.com, and in this video I'm gonna show you how the new format of profit or loss under IFRS 18 should look like. And because it brought really significant changes, I will try to show you exactly how they affect the new statement. So this is the statement of profit or loss, fully in compliance with the new standard IFRS 18, and it might look the same as we have seen many times before. So where are those changes? Well, the change number 1 is that we need to present income and expenses by categories, and also new categories are required. They resemble those as the statement of cash flows, but let me warn you, they are not the same, and you should not present the same items there as in cash flows. So let's get back to the statement itself and show. Here, income and expenses are presented by categories: operating, investing, financing, income tax, and discontinued operations. And the first 3 categories are new, as I mentioned, so entities might need to do some additional work to structure their income statement this way. Change number 2, new subtotals in profit or loss are required because many companies used to present whatever they liked, and thus it was quite incomparable. So here they are: operating profit or loss. In this case, it's profit, and that sums up every single line item in operating category. Profit or loss before financing and income tax, which is basically operating category plus investing category, and profit for the year. The first 2 subtotals are new requirement, and just note that there is no subtotal like profit from investing or finance profit or loss. Instead, you are adding the new lines to the operating profit and building it from there. Change number 3, IFRS 18 requires to present operating expenses either by function, by nature, or on a mixed basis. Now, I know this is not completely new, but these requirements became more structured and precise. So basically, we are speaking about the operating part here, and we must make sure that the operating expenses are presented either by function, by nature, or on a mixed basis. And that really depends on the assessment of entities' operations. It's not a choice. The change number 4, there are additional requirements for entities with specified main business activity, which is logical because that general format might not fit every business. And so IFRS 18 says that even entities' main business activity is investing in assets, and those would be, for example, investment property companies or investment funds, or it is providing finance to customers, for example, banks, then they classify certain items differently than other entities. So let's see. Again, we have our profit or loss statement that you have already seen. So this is a typical presentation for entity without specifying main business activity like manufacturer or retail company. Now let's compare this with the profit or loss statement of the entity with specified main business activity. In this case, providing finance to customers, because we will look at the bank. So you can see the statement here and you can take a closer look. You will see that some items are presented differently in different categories. For example, interest expense is shown in the financing category for manufacturer, but in the operating category for bank or entity with specified main business activity, providing finance to customers. Therefore, anytime you're drafting the statement of profit or loss under new IFRS 18, the first thing to do is to determine whether the entity has specified main business activity or not. That's it for today. Please like this video if it helped. Hit the subscribe button and notification bell to stay tuned for more. And if you need to learn IFRS more deeply, then check out my free newsletter on cpdbox.com. Thanks for watching. Bye.